Hello, I'm Adam Child, President of Titan Capital Holdings. I want to thank you for attending our event today and for a number of you that have logged in live stream. I want to introduce Glenn Michaels. Glenn Michaels is Vice President of Titan Capital here, a veteran loan officer, head of our consumer and portfolio lending, and he's going to walk you through our PowerPoint presentation today on Titan Capital, the products we have to offer, and what's going to help you get more deals done. So let me please introduce Glenn Michaels, and thank you for attending the event. Glenn?
Thank you, Adam. Thank you, and welcome. My name is Glenn Michaels, and my goal today is that you are going to get a really good understanding of exactly what we do. Like any people, if they have an understanding of what the product is, they'll sell it. They'll use it. But if they don't understand what it is, they won't. So that's my goal for you. So the title, Home Loan Financing Made Easy, we're going to get right into that. First off, let me tell you a little bit of my background. I actually got my real estate license in 1984, and 3 years later got my broker's license. I actually did what was called back then a buyout program, where I would go to builders and they would refer me direct, and I would literally walk into someone's house and buy them. So over the course between 1984 and 1993, me and my partner bought 888 homes. And then since then, I've bought well over 900. So I have a very, very large background with anything from real estate to lending. And I got my my loan officer's license in year 2000, just because I had thought about retiring. And well, you know what? I still love helping people. So that's why I'm here today. Let's talk about Titan Capital, though. Our goal is helping create and facilitate investment opportunities. So where does that fit in? It fits into the real estate realm. In other words, if you're working for a buyer, for yourself, for owner-occupied second home or investment or commercial, or, as I said, just your own, that's our job, is to help you create more opportunities so that you can get more sales, get the property you want, and obviously get paid. So the company was actually formed in 2009 to provide short-term bridge loans to real estate investors. We've got really 3 companies under one roof. So the old cliche of we're a one-stop shop, we really, really are. We've got an InfoClosure is a company designed strictly to work with auctions. And we've got a great seminar actually we put on often for helping people understand the auction piece, which can be a huge benefit for you, which ties right in with what I do. Then we've also got Look Inside Realty. Look Inside Realty really helps the auction company as well as myself put it all together. So let's just say we find a property, they decide they want to buy it at auction. Next thing you know, I'm going to do the hard money, and we're going to close the very next day in 24 hours. Bottom line is, we have Look Inside Realty run a BPO on it. If that doesn't work, so that comes back as basically comparables. If it works, we move forward. If not, we send out a BPO. So very, very simple. Let's talk about typical mortgage. A typical mortgage versus alternative and private money. Typical mortgage is your standard A paper, like Fannie Mae, Freddie Mac. Those are conventional loans. And then you've got FHA and VA. Those are all A paper products, which actually I am very, very well versed in it. I know A paper like the back of my hand. So that was one of the reasons I was hired, was to come and create part of the A paper within the company that does the alternative and the private money. So what is alternative loans? Let me just give you a quick story about a scenario that I've dealt with personally. Let's just say you've got a wealthy family in Scottsdale. Very, very good income that comes in, also have a lot of money in the bank. They bought a property for $1.5 million, okay, back in 2004. Now, fast forward, 2008, next thing you know, foreclosures are starting to get a little more prevalent, but they really still like the house. So they haven't chosen to move yet. Well, based on information that I've seen from other realtors that I know, the bottom of the market was 2 years ago in March. At that point, that type of person, if they hadn't already, were really starting to look at things from a business perspective and said, does it make sense for us to keep this property? When we paid $1.5 million, we had a loan for $1 million or $750,000, whatever, and now it's only worth $500,000. Because it's a non-judicial state, they're not even going to come after us for the balance. So let's make the business decision, honey, and let's move out of here and let's find another home that we can buy for $500,000 to $1 million that's even nicer than what we have, and get rid of all the debt that we had on our previous property. So that's actually where alternative financing comes in, because they did not get good advice. And because the short sale person that they talked to originally, who was a specialist in it, gave them information. But they didn't really know that since they couldn't short sale because it's very similar to qualifying, they didn't really realize that now they can't get a loan for a conventional, for FHA, or for jumbo right away. And especially if they're buying in the upper range. FHA, actually we just have some new rules that is only 1 year if you can prove a 20% hardship, but normally it's been 3 on foreclosure. Well, guess what? Conventional and jumbo is 7 years. 7 years. So these people are now stuck. This is where alternative financing comes in, and also private money. Alternative just means it's another way to help your borrowers get a loan. So let me ask you the question. Are you tired of underwriters killing your deals? Well, those days are gone, because I can do every type of loan as low as $500. And private money, we're talking full doc loans for the best rate for alternative loans, as well as an easier doc, which is more of it for self-employed, bank statements. And then we also have a no doc product. So that's what private money is. It's our personal money. So here's how easy this is. First thing we do is we have your borrower apply for a loan. They do a normal, standard loan application. Very basic. Then after I get them approved, which depending on how you like to do your business, but typically I take the loan application, I run underwriting, or if it's our own, for A paper, if it's our own, literally my partner and I sit down and look at the risk and make a decision very quickly. I mean, in the same day. So it can be that fast. Then we get back to you with an LSR and you go out and find a property. Next is we verify that they have the funds to actually close on the property. Obviously, if they don't have the funds and they're waiting for the lottery, it ain't going to happen. Next, we send out either a BPO to inspect the property, or we run our own in-house, or we send out an appraiser. This is for private portfolio money, okay? Not A paper. A paper, we have to go through the normal channels. And then, obviously, the best thing is closing the loan, closing on the property, which means everybody wins. The buyer gets their house, you get paid, and so do we. So, number one is the collateral. We always look at the property. That is the most important thing to us. We want to know about the property. So if we know about the property, we're talking about private portfolio money now, okay? Not A paper. That's a whole other thing. Everybody does it. It's simple. But let's talk about private portfolio money. We're looking at the collateral. That is really the most important piece. We're also looking at the equity that either exists in the property because you've got a great deal, say at an auction or a short sale, and we're looking at the amount of money that they're putting down and what is their exit strategy. This is where I come in as well. I actually have a background of being a certified credit counselor. So I love helping people, your clients, actually fix their credit, raise their credit scores so they can actually get out of the existing loan that we're going to provide and get them into A paper so they get the best rate and the best mortgage that they can pay off as quick as possible. Or they obviously, within a short period of time, it could be 5, 10 years, it could be 2 years, they pay off and own the house free and clear. The next is the borrower. Who are they? Obviously, we're looking to service our debt, and we are not credit score driven in most cases unless you're doing a full doc. So we do have different types of loans. We do have the full doc loan. So we just want to know, can this buyer, do they have the ability to repay the debt? So why use us? Well, I think I already said that pretty clearly, and that is because we offer your clients something that nobody else is doing. Number one, hard money. We've got hard money immediately. When a normal institution, Wells Fargo, Bank of America, they are not going to take that risk. We are all risk-based. So we're basically creating a paycheck for you and something that has strong value for your borrowers. So let me give you a scenario. Let's just say rates vary. Well, they do vary from 7.95 all the way to 18%. So we're talking, when we say 18%, it could be 16% depending on the loan size. But bottom line is we're talking simple, interest only. We've also got fixed rates, 30, 10-year, and 15-year loans. Here's an example. A buyer goes to an auction, or actually just a normal purchase, and they pay $200,000 for it. They actually put 25% down, which makes a loan $150,000 at a rate on a 30-year amortization at 7.95% for principal and interest. That's $1,095, okay, for a 30-year fixed. Well, if this was $200,000, the same principal, still had 25% down, double it. A $600,000 or $800,000, just double it, triple it, quadruple it. That is the principal and interest payment. So they're actually getting some principal off. Once again, we can do a 10-year or 15 for your borrowers who are second homes or owner-occupied. We also have investment products. So here's a standard, 3 points. And you know what's funny? It's actually going to be 3 to 5 points. But on this particular deal, it would be 3 points. That's going to vary. Now, here's what people don't know. They always think right off the bat, wow, that's a big cost, 3 points. Did you know if on a Fannie Mae or a Freddie Mac loan, you're trying to get the best financing for your borrower, if they put 20% down, the cost of Fannie Mae or Freddie Mac is 3 points. It is. If they want to put 25% down or higher to all the way to whatever, it's 1.75 points to Fannie Mae and Freddie Mac. So there is always a cost. So are we outrageous? No. We're right in the ballpark. And actually, depending on the loan size, especially with the risk, is what we're factoring in. It's going to vary between 3 and 5 points. Typically, though, 3. Our fees are very reasonable at $850. That's for processing, underwriting, and we have a $100 inspection fee, which is basically we're going to inspect the property either in-house or a BPO. And if we, depending on what type of loan we're going to do, there could be a $400 appraisal, which we use Tri-City appraisers who have been around for years, and they're very, very good at what they do. So very, very good fees. We can close in as quick as 2 days or a week. The reason I say a week or a month, if it's 1 week, you want to close really quick, which is really great for new home builds, by the way. New home builders love a quick close, and so do the buyers. They come in and say, hey, I want to get a great deal, and we'll close in a week. Well, I can do it. And here's why. On an owner-occupied and a second home as opposed to an investor with hard money, we need still to get the title report, and we also still need to get the appraisal. So those things are going to take anywhere from 3 to 5 days. So that's why I say within a week, 5 business days, we can get the deal done. So basically, we're ready now. We just need to get the deal moving. Here's what really makes this work. A lot of companies, there's not many of us for one in the nation, but we have no prepayment penalty. Our job, my job, is to help that person get into an A-paper loan as quickly as they possibly can so that they can get the standard conventional FHA or VA, which I do all of them. So here's pretty much our rule of thumb. You get the shorter term loan, say the 6, 12-month, or 24, with a higher rate and lower points. The longer the term, so in other words, 6 months is going to have a higher rate and lower points. You do the longer term, 10, 15, or a 30-year, you're going to get a lower rate but higher points. Okay? No prepayment penalty, which means it allows you to get into a property. And this is extremely important. When people hear 3 points, like I explained, I'm going to explain these things. And you know what? That's why I want you to know. Fannie Mae and Freddie Mac already have these same costs. So why not share that? But if you're getting a great deal for them, the cost of funds versus the gain of opportunity, especially in today's market, it is a no-brainer. You can pay full price in our market today, and we still got 30, 40, 50%, depending on the area, of appreciation to get back from what we lost just back in 2006. So we've got a long ways to go. So people, it is nothing. And by the way, points are all tax deductible. Talk to your tax accountant about that. So here's another way to use some money. Private money as a bridge loan to a home for ownership and equity. How often, and you need to start looking for this, do you have buyers who actually want to buy a house right now, but they don't want to double move, and they've got equity, a lot of equity in their home? I can go to 70% loan to value based on a BPO or an appraisal and pull out cash out of their existing house, which they can now take from property A to property B that they're going to be buying, and use that money, because a lot of people coming out of a higher, larger home want to pay cash. They can use that from here without the double move. Cost versus opportunity. It's a great, great product that doesn't exist anymore. We've got it. So here's some typical type deals that we do. Auction. REO, where the bank took them back. Short sales. And any normal purchases. We do owner-occupied, second, and investment. We do traditional purchases as a fast close. That means a 10, a 15, or a 30-year loan. We have fix and flips with rehab costs. This is spectacular. I love this product. As a matter of fact, one of my investors that I've known for years, done a few different deals for him over the last year, has a group of investors that he works with that he has created doing fix and flips. Well, here's the deal. 20% down on, say, an auction property or a fix and flip type property. Okay, we do a BPO. It's that fast. $850 in fees plus $100 in inspection. 20% down. If the loan amount is below $150,000, it's going to be 18%. If it's $150,000 or above, 16%. And here's what I love. Check this out. Rehab cost. Okay? So let's talk about that. Let me give you an example. You buy a house for $200,000. You put 20% down and it's a fix and flip. That means you now have a loan amount of $160,000. That's the 20% from $200,000, right? And you paid $200,000. But you know if you put $50,000 in repairs, so in other words, $200,000 plus your $50,000, bottom line is that house is worth $300,000 in today's market, and you know you can sell it for that. We're going to do an appraisal on it, a full appraisal, to verify the value is that. Then we're going to take 70% of $300,000, which is $210,000. Okay? So now, where did you borrow your money for your rehab? From us. You had an original loan amount of $160,000. Now you've got one of $210,000. We give you, it's basically a mini construction loan for a rehab. $50,000 for your repairs, up to 70% of value. That's a great, great product. Okay? Cash out loans for rehabs, kind of what I just talked about. They've got a property, say, in Paradise Valley, Scottsdale, Gilbert, Circle G, whatever. Bottom line is they want to borrow some money. We can do that as well. Same with new investments. Construction loans. It's really hard to find a company that does construction loans. We've got a great product. Obviously, this is more of a short term, from anywhere from 3 months to 6 or 12-month terms. And we've got it, interest only. And then the goal is that we take it out. Could be an alternative loan or an A paper, it doesn't matter. Or you're doing it as a spec to sell to somebody. Either way, every one of those, my partner and I are literally going to sit down and we're going to price it out based on risk. And lastly is the bridge loan that I just talked about. So here's the different terms that we have in different packages. The 6-month flip, this is the fix and flip. Then we've got our 12-month, which is they're buying it for the sole purpose because they got a great deal on it. They want to hold it just for a year and then sell it on the open market, but get some equity built. Your 24-month product, that is typically going to be 13, 14% interest only, typically with an investor who just wants to keep it for a little longer term. We can always redo that at 24, do extensions on that as well. Or my goal is if they want to keep it long term, turn it into A paper. Okay? We've got our 30, 15, and 10 year. So these 15 and 10 are really our own cash that we've got available that we can close within a week. And then the 30 is anywhere from a week to a month type range, and that's typically a full doc loan. So this is where the full income comes in, an alternative for self-employed. This is a great, great product. So how often have you had self-employed people who own their own small business or medium-sized business? They write off everything because they can. They run everything through their business, their cars, their clothing, everything. And so their bottom line is a zero. Can they get a loan? No, they can't. Well, guess what? I've got personal or bank statements for the last 24 months. It's really what used to be known as a stated income. That's how it started. So that's an alternative loan for self-employed people using 24 months of bank statements. A fabulous product. And here's what's great. No credit, easy doc. It really is a no-doc loan. I pull your credit, but I don't base my decision based on their credit score. It could be 400, I don't care. It really comes down to, can they afford the debt service? If they can afford to pay us back, that's what we're looking at. So we're going to look at the equity position. We're going to look at the borrowers. We're going to look at the property. The collateral is the biggest piece in this. Because if we had to take it back, and by the way, we've only had, since 2009, we've only had 5 since the beginning of this. So obviously, we know what we're doing. We know how to evaluate our risk and our borrowers, and it's really based off the collateral of the property. Okay? So end user bridge. Buy today with conventional exit. That's really what the story I told about a little bit earlier, where they take the money out of here, use a bridge loan to get into the other home. And for some people, it may be they only have 50% equity. We only need a portion, 20, to put down over here so they can get a normal conventional loan, and then they can stay in here and sell their house after they move, so there's no double move. But they have no mortgage insurance. Then, depending on the lender, which some of the ones I work with do, they'll allow you to renegotiate the term by putting the balance of the 30% that they get off from the sale, and we renegotiate the term of the loan down internally with their new lender. So there's no cost at all. It just reduces their note. Okay? So construction loans, A paper. Guys, seriously, construction is big. It's back. Land has finally got some value again. You can still get great deals on property. So we've got the product, and it's super easy. I've got, if you want to get in contact with Lisa, my assistant who sent out the email today, just tell her to get in contact with me. I will have a conversation with you. I've got some great documents that will help you immediately to get your people motivated. And so you can use my documents to actually help you with that. I've actually got deed in lieu. I've got foreclosure, short sale, bankruptcy, all of those particular hardships. I have the exact amount of time that you need for conventional, for FHA, for VA, that is required by law within the guidelines for those type of loans. How much time do you need for them? That way, you can talk to your people more intelligently. Just have your cheat sheet with you at all times. I've got all this kind of stuff. I've got a Word document that literally is the application. You send it to them. All they do is send it back. If they send it back really quickly, in a day or two, you know you got a hot buyer who's ready to go now. So, and then I just fill in the application, get it out, and they get it moving, get them qualified. Okay? So when it comes to A paper, guys, I have got spectacular, just like I said, smoking good rates. Here's what I'm really good at. I'm actually a preferred lender with some builders in town that you've heard about. Blandford, Mint Homes, Fulton Homes. I have done loans for these people for years. Blandford and I go back 20 years. So bottom line is, I've got incredible rates because I have to be extremely competitive just to get that market. So here's what I love to do. On VA and FHA especially, I can do a little bit on conventional, but it's a little harder on conventional because Fannie Mae and Freddie Mac don't pay us much to buy these loans. But FHA and VA are simple, okay? And bottom line is, how would you like to have your client on any home, not just builder deals, but on any home, where they are actually, you're negotiating the deal for them, and you're not asking for 3%. And your borrowers are tight on money, because as you know, since the market is a lot tighter today, right? Bottom line is, since it is tighter today, right here, they don't want to miss that opportunity, and you don't want them to either. Well, I'm going to cover their closing costs, anywhere from 2 to 3%, and give them a smoking good rate. Today, I can cover 2.5% today on FHA and give them a 4% rate. So basically, all they have to have is a 3.5% down. Now, that's going to vary depending on the loan size. The higher the loan size, that number goes down. The lower the loan size, it won't cover quite all of it, because some fees don't change, like processing, underwriting fees, those remain the same. But I'm going to pay for them. But then you still have title fees and prepaids, all those things you know about. So let's think about this approved short sales, REO properties, new homes. What I'm offering you guys is a way to get any of these deals done and get them done quickly, as fast as 24 hours. That is incredible. We want to be able to be the lender that says we can actually close quick in a day or 1 week or a month and actually get it done. So in other words, we deliver. That's my goal, is that we deliver. So all you have to do is, I got the information, get it to them, get it to me, get an LSR out, find the property, and move forward. Just so you know where we are, right now we're currently licensed in Arizona. We're also licensed in Nevada, if you know people out there, so you can get a referral fee. And very, very soon, coming quickly, actually, we've already applied for a license in California, and then I've got to get licensed out there to do business. So that is coming probably sometime early, like January, February, March range. So thank you very much. I appreciate your time, and I look forward to hearing from you. Do me a favor, just send an email back to Lisa, ask her to forward it to me, and then let's get on the phone. If you want to call me direct, my number is, write this down, 602-469-8694. And my name is Glenn, Glenn. Last name is Michaels. And my email is glenn@titancapitalholdings, with an S.com. Glenn@titancapitalholdings.com. I look forward to talking to you, and have a great day.